Summer survival, how to vacation, enjoy life, and still hit your financial goals.
Welcome to the Physician Sense Podcast, a podcast designed specifically for physicians, offering a breakdown of complex financial topics to help you develop your financial IQ, further your financial journey, and improve your well-being. Whether you're a medical student, resident, fellow, or attending physician, you're sure to learn something new that will benefit your journey. And now, your hosts, Chad Chubb and Tyler Olson.
Welcome to another episode of the Physician Sense Podcast. I am your co-host, Chad Chubb. I'm joined by the one, the only, the magical, the fabulous Tyler the Olson. I like adding the "the" now. How are you, my friend?
I am enjoying springtime. It's nice today. It's like 70.
Oh, that's nice. Yeah.
I don't want it to get any warmer. So, and it probably won't, right?
You had a good winter in the Northeast this year. You guys were not messing around.
Yeah, no, it was great. I am really glad that I finally buckled down and bought that 2-stage snow blower. Man.
I always joke, I know it's bad in the Northeast when there was reported snow flurries around Tampa this winter. So I know that it was...
Yeah. But it's you got a nice warm topic for us today.
Yeah, nice warm topic here. Today's topic, summer survival, how to vacation, enjoy life, and still hit your financial goals. It's a good one. Also, I wanted to share a cool fact with you, Tyler. We don't really talk about statistics of the podcast, but we are a rapidly growing podcast, my friend. Now, this was technically as of April, so these numbers are likely by the time this go live, ideally much higher, but we have officially surpassed 25,000 downloads, my friend.
Wow, that's really cool.
25,500. Fun side story. I put another stat down here. When we first started, we would average about 100 downloads in the first 7 days. We are now close to averaging 500 downloads. We have had 400% growth. And if we were a portfolio, my friend, we would be kicking butt.
Yeah, because it's only been 2+ years.
We are, so this technically, another fun statistic for you, we don't really call them seasons for Physician Sense, but our next episode would be the start of season 3. So this is actually our last episode of season 2, if we consider July 1st, new season deadline.
Well, very exciting.
Happy end of season 2. We'll consider this a playoff game. So this is for all the marbles today. And we're going to go with summer survival, how to vacation, enjoy life, and still hit goals. So I throw it back to you. How do you approach summer vacations in general? I think clearly summer is probably the most frequent time for family trips. How do you approach this topic with your clients?
It gets rolled into the annual or, every other year vacation spending planning. So we break down our travel and vacation funds into domestic and international. Maybe you go international like every 3 years or whatever, if you're into that, and domestic once a year, or not once a year, but every year. And the summertime, actually the thing that hits usually that's unique to the summertime for our clients is camp.
Mm-hmm.
They've got their family trips that they go together, but then they also their kids go to a camp that's 1 week or 2 weeks or whatever, and those are not cheap. And the kids will go to more than one. They'll be they're going to do one in late June, and then they're going to do another one at the end of July. It's expensive. So setting aside funds for that, it gets allocated separately because it's not exactly vacation. I mean, it is kind of for the kids, I guess. But yeah, we lump it all together. So the summertime is probably where a lot of the funds get used. And so what we try to do from a cash flow planning perspective is build the contribution into the separate Ally savings account vacation bucket where the money is going in there every month. And it doesn't happen this way the first year, because usually when you start the planning, it's not like it's going to be 12 months before you take a vacation, but you try to get money in there and then pull money from that to pay for the vacation so that it starts to feel like when you see it visually, the money that's in that savings bucket is for the vacations. And then the checking account is free to be used for as much door dashing as you want, and or whatever. we like to project out when those major expenses are going to hit. And if there's not going to be enough money in the vacation fund, then we have to have a conversation about maybe putting in extra into it just to kind of get into that flow of putting the money in there so that it's there when you want to pay for the vacation and it be a monthly contribution like an expense. And so that way they get into a good routine. How about you?
Yeah, I'd say we're pretty similar. As you're talking and thinking through this, I think the earlier a client joins us, so, whether this is the end of training or like call it first 5 to 10 years as an attending, I feel like I'm going to use the B word here. Budgeting for a vacation is more commonplace, where that's where we kind of have it built in as a budget line item. They're usually using some type of like ally bucket where they're putting aside. So when the time comes to book that expense, that trip, it's that guilt-free spending, right? It's already set aside. As clients get further down the line, I think it's a combination of their cash flow, their emergency fund. I think just the busy lives of physicians that they're likely not taking like a 4-week European vacation that is, 60 grand. A lot of our clients almost just take it in stride. We're not going through the exact numbers because they know their cash position is going to be able to handle it and they're not going to think about it, whether that's from a cash flow perspective or an ally savings bucket. A lot of our clients also, just kind of another way to think of it, we have some clients that, they consistently get bonuses. We will have systems in place for these bonuses. And one of the things might be is setting funds aside for travel and having those funds set up. So whether you're doing it through cash flow or bonus, I think there's definitely interesting things to think there. Tyler, I have a follow-up question for you. Kids camps are a good one. That is an expensive one. Do you know what the average trip for a family of 5, we're going to assume 2 adults, 1 older child, 2 younger children, to Disney costs these days?
My soul.
That's included.
Family of 5, you said?
Family of 5.
How long? A week?
Yes.
$10,000.
Oh, you must do this for a living, my friend. Pretty close. Now, this is from mousehacking.com, popular Disney blog. They noted $9,045. Now, I'd also love for them, I'm sure it says it in here, but I'm not reading through. Oh, they said 5 nights. Yeah, it is 5 nights at Pop Century, which all my Disney nerds out there, Pop Century is a good hotel, but we know we have some bougier resorts than Pop Century. Because I also read reports that said, it could be easily 15,000. But I think that kind of brings it all back to the main question too, is like, it's actually amazing. And now when we're recording this, we're in a war right now. Oil prices are going up. If oil prices are going up, guess what else is going up? Your airline tickets are going up. Or if you're making a 2-day travel across the country, like someone I know on this podcast soon, there's also gas costs that go up. And that's one that can have an effect on that as well. So it's amazing how much you can feel inflation in a lot of places, but in particular, travel, you can definitely feel that in there. I feel like Disney's been crazy expensive going the whole way back to COVID.
It is so much money. And I mean, pretty much wherever you go, it's going to be like, we'd like to plan a trip for Scotland. And I think part of it too is like, it's a matter of, because you mentioned the cost of, like, the average was $9,045, but surely could be higher if you want to do it nicer, like more luxuries, more extra stuff. And I think to me, when I go on vacation, if I'm going to do it, I think especially like this may or may not be a like I have a kid kind of a thing, or maybe like for other people who don't have kids, maybe they feel this way too. I just know for me, without kids, I was a lot more like, let's just like make it cheap as possible, save the money, we'll go there, we'll just have fun. And like, I was also younger too, so that is a factor. Anyway, what I'm saying is that if you're going to go to the trouble of going on a vacation, I want to, 1, not think about how much money I'm spending, and 2, I want it to be nice. I would sooner stay home than do a cheap vacation, because I like my house. We're already paying for it, and we can have good experiences and stuff. If I'm going to go across the world, like if we go to Scotland, could we do it for like $7,000-8,000? Probably. But the way I want to do it, we're probably going to be more like 15. And I get that that's a personal choice, but anyway, to me that goes into the decision too.
Well, and I think there's a deeper soft side of money topic in there. I've always been on the record saying that there are very few things that I like to spend money on. We don't have fancy cars. I don't buy fancy clothes. I've probably worn this shirt in our 2 seasons probably about 15 times already. I don't have a crazy wardrobe. I don't like fancy watches. But my wife could walk up here right now. My love language is a fancy vacation. It's the one thing I enjoy. I enjoy the experience with my family. I enjoy that. It's the one thing that I value a lot in terms of spending my money, which from a client perspective, this is why the deeper soft side of money questions are important. Because you might say to an advisor, I'm going to spend $20,000 on a trip. But if you had no other conversation, that advisor might think you're crazy. But if they know that that is one of your biggest priorities, that's time with your family, that's something that you enjoy, it's something you value, and then the rest of your budget is relatively calm because let's just use myself as an example, there's nothing too crazy in there, that's perfectly fine. It all fits in there. And that's why understanding what's important to you, what's important to your family, your spouse, significant other is really important. So, Tyler, I think you worded that perfect. Because again, to our audience, to our physicians, right, you don't get a lot of time off. So whether you're doing, I'm not saying go book the bougiest hotels every time, but I hope that when you truly take time off, you can sit there and be in the moment. You can be present with your family or your friends and actually enjoy it. And you're not walking up to pick up that pina colada and say, oh my gosh, $17 for a pina colada. You're not even thinking about it. It was already built into the budget. You got some wiggle room there. Get the extra pina colada, ask for double cherries. Like, it's okay. We're going to make it through this. You're going to get a lot out of this. And ideally, you're going to come out of this thing energized. You're going to be ready to kick butt when you get back. You're going to make even more money when you get back. So I think there's deeper parts to this. And that's why I was kind of excited for this topic. It's a lot more than just a budget line item. There's a lot that goes into this.
Yeah. I'm totally with you. If you do that, then you actually enjoy the trip. And then this is the case for a lot of doctors. Are concerned or even feeling guilty about spending money. It's really important to do this because you need to spend money. You need to do things for yourself. You need to experience the world your way, whatever that means for you. And earmarking the money and being like, this has to be spent for vacation. It's one of the best things you can do for yourself as far as money decisions are concerned.
And to piggyback on you loving your home, I'd also like to add in a side note here is, take advantage of your days off. And even if those are staycations, whether that's doing stuff around the house, whether that's getting the local, we're in Tampa, so there's a lot of great hotel, going to the local hotel downtown just to be able to use the pool and have someone clean your room and not have to worry about it at a fraction of the cost of a big trip. Don't be scared of the staycation, whether that's actually in your home or that's, something a lot more local. Take advantage of that as well. It doesn't always have to be, the big extravagant summer trip. Again, I think we're leaning that way in just terms of conversation, but there's a lot of other ways to give your mental side a break with those staycations. And I guess, as we come down the home stretch here, Tyler, the other ending note we had here is still hitting your goals. I think we covered it well by saying like, hey, we kind of build this into the systems, but what additional insight would you have to saying, hey, you're still on track to hit your goals by doing these things here. Here's why. Yeah. Let me give you an example. For most of our clients, they're going to go take these trips. But the reason why they're still on track to hit their long-term goals is because just because you took the $15,000 trip to Disney, you likely didn't mess with your 403B. You didn't mess with your 457B. You're still doing your backdoor Roth. The kids' 529 plans are still funded. The joint account, the taxable account is still kicking butt. You likely didn't change a single thing in terms of your long-term spending or long-term savings, I should say. Yes, maybe something went on the credit card to get some points, but you're going to pay that off because you had the money set up in Ally. So even though there's a larger expense that pops up, you likely had no effect on your long-term plan. I'm always surprised when we show clients like, hey, if you plug in one random major expense, at least in terms of the big picture plan, it likely is just a blip on the radar. Now, clearly, we're trying to make these more consistent, continue to take good trips, but that's more or less what I was referring to is how do you ensure your client that, hey, it's okay, we're going to be good.
I mean, visual cash flow, like waterfall style flow charts, make a big difference. And being able to see, for them to be able to see that the money is flowing toward their retirement accounts or their taxable investment accounts concurrently with money going toward a goal expense. This $15,000 is going from your income, and it's going to be spent on a trip. And at the same time, you're saving $80,000 amongst your various investment accounts, whatever that is. And I think that helps them to see that their money is working very hard for them and that they have a robust savings plan going while they're spending money on their vacation. That's been the simplest and most effective tool for this particular area. Do you use that too? Do you use cash flow charts?
We have an internal sheet we call the Wealth Kill Snapshot where we more or less track all that so we have assume both spouses are working, right? We have both pay stubs here. Then we have a budget built in here. We kind of track all money in, all money out. We track ratios on the side. So we are tracking the spending. We just kind of have it built out a little bit different way. I know you use Holistaplan too. I think Holistaplan even added a recent tool where you can do like the water flow view of spending, which is, I think that is cool. You and I follow some of the same people on Twitter in our space. And I think there are some really neat ways to show cash flow that's very, very interactive and appealing to the eye as well. So I know what you're referring to. We kind of use it a little bit different way, but definitely know what you're saying. Anything else to add, Tyler, on summer survival? I will note, I don't know if you noticed this. I feel like there's a little bit of lifestyle creep in summer too. I think there's just a little bit extra spending. The kids are home. You might have a little bit more downtime. So keep an eye on lifestyle creep as well through the summer months. Maybe even inflate the budget a little bit, knowing that, hey, in summer spending can go up. That one's outside of the travel budget, but we do notice that. I can say I even noticed I feel like we do a lot of home projects in the summer. So the Chubb household budget jumps up a little bit as well. But that's just a little tidbit for the summer survival.
That's why a cash flow analysis over several months helps you to give a reasonable average, including those normal ups and downs. Although, who are we kidding? There's no downs in spending. It's only ups.
We joke with our clients about this. As they get closer to retirement, they're always like, my spending's going to go down in retirement. I'm like, oh yeah, tell me more. I'm like, it never goes down. Even when the mortgage is paid off, then you got grandkids, you're doing more fancy travel. You're going to set a lifestyle that the last thing you want to do in retirement is to actually go down. Like, you didn't work your butt off for decades. So you'd be like, well, I've been dying to try ramen noodles. Let's give it a shot. It just doesn't work that way. It doesn't work that way. Yeah. But this is a good one. This is a fun one. Timely. So to all of our listeners, enjoy those summer vacations. Have fun. Be present. Be in the moment. Enjoy all that hard work. Tyler, enjoy your summer vacations as well, my friend. But most importantly, I will catch you on the next episode.
Looking forward to it. See you, man.
See you, Tyler.
This information is for general purposes only. This information is not intended to be a substitute for specific professional, financial, or tax advice, as individual concerns vary. Please see a financial professional, CPA, and/or an attorney in regards to your own individual situation. Wealth Heals advisory services and financial planning offered through Vicus Capital Inc., a federally registered investment advisor. Olson Consulting LLC, offering advisory services and financial planning, is a state registered investment advisor.